Hello, friends. It's Morris Jackson with Religion, Economics, and Politics. And look, I've been studying on financial stewardship, and I think it is just imperative that we as Christians have our financial houses in order. And in order to do that, we need to understand financial stewardship, because everything as we understand it in the Bible comes from the Lord. The fullness of the earth and therein belongs to the Lord. Everything that is imparted to us, whether it's our finances, our children, properties, whatever we own, we understand as Christians that we would not have any of that if it were not for the Lord seeing fit to bless us with those things. So we need to be good financial stewards over that. And when we talk about financial responsibility and stewardship, it's not just about paying your bills and on time or managing your money properly, which is a very subjective thing. So I want to take it a step further to say that it's not only proper that you make sure that you're paying your bills on time, but also what else are you spending your money on? How are you allocating your funds appropriately? How are you protecting your wealth? How are you growing that wealth? I want to read a scripture to you here. Proverbs 13, verse 22. A good man leaves an inheritance to his children's children, but the sinner's wealth is laid up for the righteous. So you see here in Proverbs 13:22, it says that a good man leaves an inheritance for his children's children. So not just to his kids, but to his children's children. So we're talking about generational wealth. I like to look at the Rockefellers and just to kind of put it in contemporary times. The Rockefellers had a principle that they lived off of, and they built their wealth, not only through secular means in the industry, but they had a principle about keeping the money together, and they wholeheartedly believed in insurance. Now, I know insurance is something that a lot of our people, and I say our people, African Americans, don't like to talk about. And for the most part, a lot of people don't like to talk about insurance because it can seem like a morbid topic. But look, the Bible says we're all appointed a time to die. So it's going to happen. So we need to remove the emotions out of that decision, and we need to make good business decisions and be good stewards. So you have to think about this. You as a father, mother, 30, 40 years old, if you meet an untimely demise or something happens, God forbid, who's going to care for your children? Now, we know that you can't do that from beyond in a physical sense, but you can through proper planning. Now, if you are a parent right now, one thing that you should make sure that you do is you should get insurance on all of your children and yourself. Why do I say that? Because many times we will see situations happen, and as unfortunate as it is, a lot of times parents aren't prepared. If they lose a child, it's happened in my family, and it's a very tough thing to get through. So the last thing that you want to think about is how are you going to lay your child to rest, and how are you going to cover those expenses? So you need to make sure that you have what's called last expense or final expense insurance. Final expense insurance is the insurance that pays out immediately within 24 to 48 hours of the death of a loved one. Funeral prices can be very expensive and vary from jurisdiction to jurisdiction. So I would say it'd be safe to get anywhere from $20,000 to $25,000 in final expense insurance. Depending on the age of the person, you could pay anywhere from $20 to $30. For myself, I pay $60 a month. Just being transparent, $60 a month. If something was to happen to me, that is a separate insurance that pays out within 24 to 48 hours. We all know that funeral homes, they want their money and they want it right away. So while you're grieving, they're taking care of business. So just understand that. So we need to take care of business before we get into that emotional state or we experience that situation where we're in grieving. And make sure that your planning is done ahead of time. So final expense insurance on you as well as your children. So that way, if you pass away, and we hope that we pass away before our children, if that happens, then your children won't have to worry about how they're going to take care of you, should you pass away. Well, we're going to pass away, so there's no getting around that. As many push-ups as we want to do, and vanity projects we put in place for ourselves, at some point in time we're going to pass away. But anyway, if you get that insurance, the final expense insurance, your children will have the finances that they need in order to make sure that they put you away in dignity. So that's number one. So the final expense insurance is different than life insurance. So, term life insurance, okay? This is insurance. This is a death benefit. You only receive the payout once the insured passes away. You need to have that on yourself and on your children. Spouses, make sure that you have it on yourselves, and then you need to talk to an expert, and I'll make sure that I put you in contact with someone after this video. I'll put the information out there. But you need to make sure that you have term life insurance. That's a death benefit insurance. Totally different than whole life insurance or an IUL insurance. You need to make sure you have that. Now, all of these things I'm telling you about, the Rockefellers use this insurance in order to pass along generational wealth, and I'll tell you how in just a second. But so we got the final expense insurance. That's for burial, making sure that you can take care of funeral expenses right away within 24 to 48 hours. Term life insurance, which is death benefit insurance. The purpose of that, let's just say you're a parent, you're 30, 40 years old, your children aren't grown yet. Someone's going to need to care for them. Someone's going to need to take care of college expenses. Someone's going to need to, pay off some bills for your estate. That's what term life insurance is for. So that insurance policy pays out. It takes a little time sometimes for that insurance policy to pay out. So that's why you want to make sure that you have your final expense insurance, which will take care of the funeral expenses, but then you have the life insurance or the term life insurance policy, which maybe could take a couple of weeks to pay out. You don't have a couple of weeks to wait on money to get to the funeral home. So you see the difference there, okay? Your term life insurance, you can have riders, what's called riders in your term life policies, which are assignments, where the money's going to go and how it's going to be paid out. So you can assign money towards college expenses. You can assign some money towards to pay off the house, the rest of the remainder of the mortgage, so your family isn't strapped with that. You can, just about anything you can think of, you can assign a rider to that term life insurance policy. Now, the next policy that I'm talking about is the whole life insurance policy. So whole life insurance has a savings component to it. Okay, and I won't get too deep into that, but it has a savings component to it as well as a death benefit component. Now, with the whole life insurances, here's another reason why I recommend you get this, is you can do your own banking through whole life insurance policies, especially what's called the Index Universal Life Policy. Okay, those are both whole insurance policies, but just a little bit different. So once you accumulated a certain amount of money, let's just say family member needs $30,000 to start a business. Well, you all could basically hold your own family board meeting, decide on whether or not you're going to lend $30,000 to that family member. If it's a good investment, you can determine the repayment terms as if you were a bank, and you could decide to disperse those funds in the form of a loan to that family member to start that business. You get the idea. That's whole life insurance. Now, your index universal life insurance, it also has a savings component, but it also is tied to the market as well. So you have a savings component that's here. That's your principal that you put in. You never lose that money. And then you have the market. So we understand that the market can go up and down, but there's a guarantee in the IUL, or the Index Universal Life Policy, that no matter how the market fluctuates, you never lose your principal. So it's a good vehicle, and the same thing you can do with the whole life insurance policy. You can also borrow from that without penalty. So the good thing about this is you can invest in these things. It's not the same as your 401k or your IRAs, where there's going to be penalties. So like I said, don't want to get too deep into that right now, but I'm going to advise that you actually call in or write to us, and we'll put you in contact with someone who is very well versed on these financial products. So the other thing I would recommend that you do is if you have a 401k. I touched on that. We know the market is volatile right now. So being a good steward over your finances, we need to look at how do we protect our money. We put all this money in, we earn it every month, and it's going into this 401k. Now, my principal is not protected like it is in, say, an IUL, or even more so, just slipped my mind here, an annuity. Sorry, an annuity. You could actually roll your 401k over into an annuity without penalty. Protect your money, and at the same time, make some modest gains on your money. Your principal's protected. You could also set up an annuity to generate permanent income, or I wouldn't say permanent income, or let's just say income for the rest of your life. So these are some vehicles that you should be putting into place right now. We know that the market is volatile. We know that there's uncertainty right now with all the tariffs. They're on, they're off, they're on, they're off. Well, how do you plan? This is where stewardship comes in. Financial literacy, protecting your wealth. First off, let's get the final expense insurance. Go get it on all your children. It's very inexpensive. Look at term life. You need to make sure you get term life. Very inexpensive. You can get a lot of coverage, especially if you're young, non-smoker, fairly good health. You can get very good term life insurance. I would also look at a whole life, or preferably, in my opinion, the IUL. If you're in a 401k, convert that 401k over to an annuity. Very beneficial to you. You can set up annuities in many different ways. If you don't want to roll your 401k over, you can actually put a lump sum into an annuity and generate some income. But these are all things that you can do, and you don't have to be a financial genius or guru. We got people that can help you do this. Please protect your wealth. Be a good steward over your finances. This is how, through insurance and proper planning, that you can leave an inheritance to your children's children, as it says here in Proverbs 13:22. The second part of that, it says, but the sinner's wealth is laid up for the righteous. Now, I'm not leaving my money laid up for anyone else but my children, because I'm what? One of the good men. Are you one of the good people out there who are being good stewards over your finances? And your money's going where it was appointed to go. How do I do this? Look, reach out to me. I'm going to give you my personal email. I want you to reach out to me. I want to make sure we get this. Email me at morrisjackson2005@gmail.com. That's morrisjackson2005@gmail.com. And I will put you in contact with some financial experts, insurance experts that can help get your finances on track and protect your hard-earned money from the volatility of the market. Guys, this is how the Rockefellers built generational wealth. As soon as a child was born, they put insurance on that child. They also set up trusts. That's another thing, a financial vehicle that you can use, or a legal instrument that you can use to keep your wealth in one place and shield it from lawsuits, shield it from taxes, all sorts of pitfalls that your money could fall into. The Rockefellers insured their children. Person passes away, the beneficiary on that insurance is not the child or a parent or a spouse. The trust is named as the beneficiary. And then the trust pays out a trust fund. And then the trust pays out the expense. This is very smart planning. But anyway, I'm going to stop it here. We'll pick up the next time and we'll go a little bit further into how some of these instruments work. But make sure you email me, please, so I can put you in contact with someone and we can get your financial house in order. This is Morris Jackson with Religion, Economics, and Politics. We'll see you next time.